Let's begin the conversation and let's talk about the power of compounding. And for this, I have Monika Halan with me. Good evening and welcome to the show, Monika ma'am. One of the wonders of the world is the power of compounding. A lot of time people don't land up understanding how it works. I mean, theoretically, a lot of people know about it, but then when we talk about staying invested in your investment and to actually reap the benefits of power of compounding, you need to be a long-term investor. A lot of people miss out the main ingredients of this power of compounding. So what exactly are we talking about? What do you mean by power of compounding? What is compounding?
Kavita, it's very good that you're trying to decode some of the terms which are used without a lot of people understanding them. So, very basically, in simple terms, compounding is when you are trying to grow the original amount. Okay, so let's take the case of investment when there is a certain amount of principal that you have put to work, and the interest that you earn from that is put back into the principal, it is not taken out. And in the next cycle, your interest plus principal earns the interest. That interest is plowed back. So your original pie now begins to grow because the interest gets added, and there is the subsequent cycle interest is given on the principal and interest together. So if you do this long enough and if the interest comes regularly, then at a point, depending on the rate of interest, your interest pie actually becomes larger than the principal. The thing to remember here is that uh, this can also work in reverse when you become a borrower. Then the lender will actually get the benefit of compounding and you will be the loser. So that's what, as an individual, we need to remember very carefully that compounding will work. It's a knife that will cut both ways. As an investor, it benefits me. As a borrower, it is destructive of my personal finances, Kavita.
All right, but then tell us something. Is there a time duration, investment duration attached to the to see the benefits of power of compounding? Because as explained by you, one also needs to understand the kind of investment instrument you are invested in. Do all kind of investment instruments offer you the power of compounding, or there are specific investment options we are talking about over here?
Kavita, if you look at an asset like gold, not sovereign gold bonds, but gold in itself, that's an asset which doesn't throw off any rent, interest, dividend. It only gives you profit because the price changes. Now, in that instrument, we can't say that there's been compounding because it's only a price change. In an instrument like a fixed deposit, there is interest which comes back. In a public provident fund, the interest does get reinvested. When we look at the stock market, a lot of people say you get the benefit of compounding, but remember, it's not compounding of interest, but it's compounding of earnings. And even then, there is a chance that if the business does not do well, if the stock fails to perform, if the mutual fund portfolio fails to perform, then it isn't as if the profit has got locked in, because the interest in, say, the PPF gets locked in, but not so in the case of a stock. So investors need to understand that you're getting compounded earnings, but that is also subject to that company or that portfolio continuing to do well. So these are very, very important things to understand. We shouldn't misunderstand stock market compounding as a given that once the profit has been made, it's got locked in. It needn't be so.
So, what about those kind of investor who are tempted to withdraw money from their investment? Because to stay locked in a particular investment instrument, you need a lot of patience. You need to have a proper plan. You need to have your financial planning in place. As a concept, power of compounding applies to each and every sector of your life, per se, because it's a beautiful concept and it reaps you a lot of benefits if good amount of efforts are put into it. But then what what would you like to tell or guide, advise those kind of investors who are really tempted to see small profits in their investment and are tempted to make the best use in their knowledge at that particular time? Because we also have to explain them that your particular investment is tied up to a financial goal, and in order to let it achieve your goal, the corpus that you want, you need to just stay away from these kind of temptations.
Right, Kavita, you see, if somebody is just booking profit because they've made some profit, they really need to think what they want to do with it. They want to consume it or they want to reinvest it. If the idea is consumption, then that's a decision the investors take in. But if it is reinvestment, then they have to think that what is my opportunity now? Isn't it better not to pay transaction costs, taxes, and allow my investment to continue? But I'm going to take the opportunity here and also remind viewers that we also must look at compounding in our personal lives in terms of the skills that we build. So we understand that there is a whole benefit of long-term compounded growth of interest and earnings. But remember, all of that is coming because of your ability to earn. So if you compound your skills and your worth, then there is a different kind of compounding working in your life. So it is Diwali time. It is time that a lot of people rethink what they are doing. They go back to brass tacks. So remember that this compounding also works on your skill set. So never give up on that. Of course, your money has to compound. You don't want debt that is compounding. You want investment that is compounding, and you want your skill set, which is compounding. And that's a fantastic combination for anybody, Kavita.
All right, so it's Diwali and we are having a very important discussion on the power of compounding. In your portfolio, what kind of investment instruments have actually shown you the power of compounding, or you've seen the miracle happening in front of you?
Okay, Kavita, so what happens is that, when we make our own portfolios, there is a whole, you're trying to do the right thing and you're trying to diversify across different products. But I'll take an example of a youngster in the family who I said, okay, I'm going to just advise 3 funds. And he did that. And then I sort of forgot about that. And it's been, 8 years. And at this moment, his portfolio is showing more profit than principal. Okay, so it depends on also when you do mutual fund, equity funds, it depends on the CAGR, it depends on the time spent. But for this youngster in the family, these 8 years have actually given more principal, more earning growth than principal. So in my personal portfolio, of course, it is long term, it is compounded. The earnings do get compounded because typically you don't pull anything out because it's made a profit. There's a certain plan, which is what I actually advise everybody else, that if you work according to a plan, ideally you work with a planner, then you are tempted not to redeem midway just because the market is, somebody is saying that there's going to be a bloodbath, so withdraw your money, or you think you've already made a lot of profit and you withdraw. So it just makes sense to be sort of very, very guarded against your emotions of both fear and greed when it comes to your money.
All right, so that will be all, and thank you so much, Monika ma'am, for removing time and having this lovely discussion on the occasion of Diwali. And with that note, wish you a very happy Diwali, and yes, lots to learn from you, and look forward to having you again on this show very soon. Thank you so much.
Thank you. Happy Diwali. Yeah, bye.